Somebody, somewhere, just inherited $1 million, and I'll bet you're thinking, must be nice. Maybe you're waiting on something like that yourself. At grandmother's house, an uncle's portfolio, a parent's retirement savings. You've heard the headlines. $124 trillion is about to change hands in the biggest wealth transfer in all of human history. More money than every country on Earth produces in an entire year, combined. And here's what the financial media won't tell you. Most of you will get almost nothing from it. But, and this is the entire point of this video, you don't have to. Because if you know where to position yourself, this wealth transfer isn't something that happens to you. It's a rising tide that can lift every boat, even yours, especially yours. Stick with me. Section 1. The Inheritance Trap. Let's start with the truth, the uncomfortable, data-driven truth about who actually benefits from this $124 trillion wealth transfer. According to a landmark 2024 report from Cerulli Associates, one of the most respected wealth research firms in the world, somewhere between now and the year 2048, $124 trillion in assets will leave the hands of baby boomers and the silent generation and land somewhere new. Heirs, spouses, charities. Sounds incredible, right? Here's where it gets sobering. Baby boomers currently hold approximately $78 to $85 trillion in wealth. That's about 50 to 52% of all household wealth in the United States, held by a generation that represents roughly 20% of the population. Think about that. 1 in 5 people holds more than half of everything, and it gets more concentrated from there. The top 2% of wealthiest American families, that's about 3 million families out of 130 million total, control roughly 62% of this entire transfer. The wealthiest 1.5% of all households, they account for 42% of all expected transfers, approximately $35.8 trillion, going to a fraction of the population. Now, what does that mean for the rest of us, for the 98%? Here's the blunt math. The average inheritance in America is $46,000, but that average is wrecked by the ultra-rich at the top. Strip those out, and the median inheritance, the number right in the middle, is under $10,000 for most American households. So if you're sitting there hoping grandma's estate is going to fund your retirement, you need a different plan. The inheritance waiting game is a trap, and today I'm going to show you 5 ways to escape it and actually profit from the $124 trillion wave, whether you inherit a single dollar or not. Section 2. The Rising Tide Mechanism. Here's the mental model I want you to lock in. Ready? Money never sits still. When $124 trillion changes hands, it doesn't go into mattresses. It flows. It moves through the economy like a massive tide. And if you are already in the water when that tide comes in, you rise with it. Think of it like this. When a boomer dies and their heir receives a $2 million estate, what happens next? That money gets reinvested into real estate, into stocks and ETFs, into new businesses, into luxury goods and services. Every single transaction in that chain creates an economic ripple. Every ripple is an opportunity. And the scale of this is almost impossible to overstate. The pandemic alone showed us how explosive wealth growth can become. Between 2020 and 2023, U.S. equities grew 27% and real estate surged 39%. Total U.S. household wealth jumped from $108 trillion to $154 trillion in just 3 years. Now, imagine what happens when trillions of those dollars are suddenly activated, liquidated from estates, repositioned by new heirs, redirected into the economy all at once. Markets get supercharged. Entire sectors boom. New investment categories explode in demand. This is what I call the rising tide effect, and the single most important thing you can do right now, today, is get in the water before the tide comes in. We'll talk about how in a minute, but first, let's follow the money, because where this tide flows next is very specific. Section 3. Sector Rotation. Follow the heirs. Now, here's where it gets strategic and where most financial influencers completely miss the point. The conversation isn't just about how much wealth is transferring, it's about where it's going to land once new heirs take the wheel. Because here's the thing, millennials and Gen Z don't invest like their parents. A 2024 study by Bank of America Private Bank surveyed wealthy investors under 43, the cohort about to inherit trillions. The findings were remarkable. 72% of millennial and Gen Z investors said they believe it's no longer possible to achieve above-average returns solely through traditional stocks and bonds, and they're backing that belief with their wallets. While baby boomers built their fortunes on a bedrock of blue-chip stocks, dividend plays, and real estate, the heirs redirecting this capital are flowing into 1. AI infrastructure, think NVIDIA, data centers, cloud computing infrastructure. Younger investors see AI not as a trend, but as the foundational layer of the next economy. Capital inflows into AI-adjacent companies will be enormous as trillions of inherited dollars get repositioned. 2. Clean energy. Over 82% of younger investors consider ESG, environmental, social, and governance factors, when making investment decisions, compared to just 35% of investors over 44. That is a tectonic shift in capital allocation. Clean energy ETFs, solar infrastructure, and EV supply chains are going to see generational inflows. 3. Digital assets and private equity. This generation grew up with crypto. They're comfortable with digital assets, private equity, and direct investment in companies in ways their parents simply aren't. The alternative investment universe expands dramatically as this wealth transfers. The tactical move? Position yourself in the sectors where the new money is flowing. You don't need to inherit anything to benefit from a sector-wide surge in capital. An index fund or ETF tracking AI infrastructure, clean energy, or broad technology today is you buying tickets to the wealth transfer wave. Section 4. The Professional Fee Strategy. Okay, let's say you've heard sections 1 through 3 and you're thinking, this is great, but I don't have capital to invest. What about those of us starting from zero? This section is for you. Here's one of the most underappreciated economic truths about a wealth transfer of this scale. You don't need to own the treasure to profit from a gold rush. You can sell the shovels. When $124 trillion moves, it needs help moving. It needs professionals. It needs infrastructure. And that creates one of the largest white-collar career surges in modern American history. Consider these fields: financial planning and wealth management. The share of millennial and Gen Z clients at high-net-worth firms grew from just 8% in 2021 to 25% by 2024. Cerulli projects the demand for advisory services to grow dramatically over the next decade. Certified financial planners, especially those who specialize in intergenerational wealth transfer, are among the most in-demand professionals in the country right now. Estate law and trust administration. Every single estate, whether it's $50,000 or $50 million, needs a legal professional to navigate wills, trusts, and probate. Estate planning attorneys are not just well paid, they are recession resistant. People die in every economy. Tax advisory and CPA services. The U.S. tax code creates massive complexity around inheritance, capital gains taxes, stepped-up basis rules, estate tax thresholds, inherited IRA rules. This is an entire career's worth of specialized knowledge that families will pay handsomely for guidance on. Real estate agents and property managers. When estates settle, houses get sold. We're talking about tens of millions of properties in boomer-heavy markets being liquidated over the next 25 years. The wealth transfer is a professional opportunity of historic proportions. You don't need to inherit money. You can charge a fee to help others manage theirs. Section 5. Real estate arbitrage, the geographic map. Let's talk real estate. Because the wealth transfer is going to reshape the American housing map in ways that will create massive winners and losers, depending entirely on where you buy. Here's what the data tells us. As boomers age and die, their estates will liquidate homes. Boomer-heavy suburban and exurban markets, think outer ring suburbs of the Rust Belt, retirement-heavy Sun Belt communities, will see a surge in housing inventory. More supply, stable or declining demand. That means price pressure. But simultaneously, the heirs receiving this money, primarily millennials and Gen Z, are heading to specific cities with tech industries, walkable amenities, strong job markets, and cultural energy. Think Austin, Nashville, Denver, Raleigh, Phoenix. In those markets, the wealth transfer creates a buyer surge. Suddenly, millennials who couldn't afford a down payment now have inherited capital. More buyers, limited supply, and you get intense price appreciation. The real estate arbitrage play? Buy in markets where the inheriting generation wants to live, not where the transferring generation already owns. Follow the 30-year-olds with inherited down payments. That's where the appreciation happens. Section 6. The Margaret Mindset. Now, I want to tell you about someone I'll call Margaret. March 2009. The stock market had just cratered. The S&P 500 was down 57% from its peak. Bear Stearns was gone. Lehman Brothers was gone. CNBC anchors looked like they hadn't slept in weeks. Financial panic was everywhere. Margaret, a middle school teacher, not a Wall Street trader, took her $50,000 in savings and put it into a broad, low-cost S&P 500 index fund. Not because she was fearless, she was terrified like everyone else, but she had done one thing most people hadn't. She had a plan. Her plan said, stay invested, keep contributions coming, ignore the noise. By 2026, that $50,000 with continued contributions and reinvested dividends had grown to approximately $590,000, a nearly 12x return in 17 years. Now here's the connection to the wealth transfer. The next 25 years will not be a smooth ride. As $124 trillion moves, there will be market volatility. There will be moments of panic. Interest rate shocks, geopolitical crises, recessions. The winners of the great wealth transfer will not be those who inherit the most. They will be those who stay invested the longest. Broad equity index funds, especially tax-advantaged accounts like a 401k or a Roth IRA, are your mechanism for participating in the aggregate growth of the economy during this historic transition. Every dollar that flows into the economy from wealth transfer touches the market. And if you own a slice of the market, you own a slice of that flow. So let me bring this full circle. You started this video maybe wondering if you'd ever see a piece of the $124 trillion wave. And here's what I want you to leave with. Wealth is not something you wait for. It is something you position for. The people who will truly win the great wealth transfer aren't the ones whose grandparents happen to be in the top 2%. They're the ones who understood that $124 trillion in motion creates opportunity everywhere it flows. In the markets, in specific sectors, in professional careers, in specific zip codes. And the foundation underneath all of it? The wealth builder identity. A decision you make today to stop being a spectator to economic history and start being a participant. Open the 401k, max out the Roth IRA, pick an index fund and stay in it. Build a skill set in a field that thrives when wealth moves. Buy in the geography where the inheriting generation wants to live. True wealth isn't the check you receive when someone dies. It's the optionality you build while you're still alive. It's the freedom to say no to a job you hate, the freedom to invest in your health, the freedom to show up for your family. The $124 trillion wave is coming. It's already moving. The only question left is whether you'll be standing in the water when it arrives or watching from the shore. The time to position yourself is right now. If this video gave you clarity, give it a like. It tells me to make more of this. Drop a comment below, I'm in the water, and let's build something together. I'll see you in the next one.